Happy Thursday. Just a couple more seconds and we'll get underway. Thank you for joining our equity series. Very excited to have experts today to give us a deep dive on resources that you are all joining to hear us. Hello, everybody. My name is Howard O, and I'm with the White House Office of Public Engagement. Thank you everyone for joining us today for our first in our virtual equity series for a month-long programming in celebration and in honor of Asian American and Native Hawaiian Pacific Islander Heritage Month. That being said, this is our exciting month, and our theme this year is Building Legacy Together, our community's journey of strength and resilience. So for centuries, Asian Americans, Native Hawaiian Pacific Islanders have shaped and strengthened the fabric of our nation. Yet many AA and NHPI communities continue to face barriers to prosperity and safety, including xenophobic violence, as well as the disproportionate health and economic impacts of the COVID-19 pandemic. So this month, we celebrate our community's journey of resilience and pay tribute to generations of Asian Americans, Native Hawaiians, and Pacific Islanders who have paved the way for greater opportunity. We also recommit ourselves to confronting discrimination and hate in all their forms, so that together we can create an America that is truly equitable and inclusive for all, which is why we are hosting this virtual equity series to provide much needed information and resources directly to the community at hand. The White House Office of Public Engagement and the White House Initiative on AA and NHPIs would like to recognize the agencies that have partnered with us today's event: MBDA, Treasury, Commerce, and SBA. Thank you all for your leadership and your thought partnership. So before I hand this off to my wonderful colleague, I'm sure many of you have heard the news of Secretary Norman Mineta's recent passing. Secretary Norman Mineta was an extraordinary public servant, veteran, trailblazer, and a giant who left an indelible mark on American history. We will miss him dearly. And with that, Kristen Kai, WHIAANHPI's Executive Director, the floor is yours.
Thank you, Howard, and good afternoon, everyone. As the Executive Director of the White House Initiative on Asian Americans, Native Hawaiians, and Pacific Islanders, or what we call WHIAANHPI, I'm honored to welcome you to this roundtable event in partnership with the White House Office of Public Engagement, as well as so many of our federal agency partners represented here today. And as Howard mentioned, before we get into the event, I do want to take a moment to honor the legacy of a true trailblazer and icon for our community. And that is the late Secretary Norman Mineta, who passed away earlier this week. In addition to being the first Asian American ever appointed to a presidential cabinet in history, he was also the chair of the first White House initiative on AA and NHPIs under the Clinton administration, and helped to build so much of the infrastructure for our communities that still exist today. So our hearts truly go out to the Secretary's family and loved ones during this difficult time. As we reflect on the contributions of AA and NHPIs like Secretary Mineta and so many others throughout this month, we are reminded of the barriers to prosperity that many in our community still face today. And these are barriers that have unfortunately been exacerbated over the past 2.5 years due to the COVID-19 pandemic. We know that AA and NHPI small businesses in particular have been really hard hit both by the economic impacts of the pandemic, but also by the pandemic of hate that so many of our communities have experienced over the past 2 years. And that is unacceptable. And it's why the president and vice president have taken numerous steps to combat hate and xenophobia against our communities and to ensure that we have an equitable pandemic recovery that is truly inclusive of all Americans. We know that small businesses are the backbone of our economy, and that when they thrive, we all benefit. Many Asian American owned businesses are immigrants or business owners are immigrants and refugees who have placed their entire livelihoods into their small businesses, often as a path out of poverty to achieve the American dream. And in the process, they have transformed our country for the better. In fact, Asian owned businesses make up 10% of all businesses in the United States. And yet many small business owners still find themselves unable to access the financial services and capital needed to sustain their work and to thrive, especially given the disproportionate impacts that so many of our businesses have faced over the past 2 years. And so that is why today's event is so important. We know that at the heart of all of our AA and NHPI Heritage Month events that we will be doing is a focus on equity to ensure that the federal government can truly deliver greater support to underrepresented and underserved communities, and also to be able to deliver on our efforts to advance equity, justice, and opportunity for our AA and NHPI communities. So again, we're so thrilled to have all of you here with us today, and we look forward to a very fruitful dialogue moving forward. So with that, I have the honor to introduce an incredible colleague and leader for our communities, our Deputy Assistant to the President and AA and NHPI Senior Liaison, Erica Moritsugu. Erica?
Thank you, Crystal. I do want to echo the sentiments that were expressed earlier about our loss of Secretary Mineta. He was a tireless public servant and a trailblazer for Asian Americans and Native Hawaiians and Pacific Islander communities and for all Americans, and a beloved mentor for many. Nearly everything we are able to do in our work is because of him. And for many of us, he is the one who brought us to this work. So as we celebrate Asian American, Native Hawaiian, and Pacific Islander Heritage Month, it is also in honor of him. He is one of the trailblazers who made this a moment of celebration and joy as well as sorrow for his loss. So want to pivot there on that somber note to just kind of reintroduce myself to those of you and the role that I play, that if it's not familiar to you, it's because it hasn't existed before this administration. The Asian American, Native Hawaiian, and Pacific Islander Senior Liaison is a member of the President's senior staff, acting as the voice in the West Wing to lift up the hopes and needs of Asian American and Native Hawaiian and Pacific Islander communities in all of our administration's policies and community engagement. And so as the appointee, I'm charged with making sure that the richness and diversity of our communities are not made invisible, and that the impacts of the administration's policies are inclusive of and communicated to our communities. It's been a busy last few weeks as we ramped up for Heritage Month, and yet it's been a time for a reflection of what we've accomplished and what we need to keep fighting for. All with the support of a president and vice president who've made it clear that their commitment to empowering and uplifting AA and NHPI individuals, families, and communities since their first day in office. This includes ensuring that AA and NHPI own small businesses, which were hard hit during the COVID-19 economic crisis, are able to grow and thrive. That's why over the past year, the administration has supported AA and NHPI owned small businesses through a $28.6 billion restaurant revitalization fund and $7.25 billion Paycheck Protection Program. The Small Business Administration helped to enhance access to capital. More than $179 billion was provided to AA and NHPI business owners and entrepreneurs, and 70 loans to AA and NHPI owned small business exporters in fiscal year 2021, worth $106.3 million. The SBA provided training and counseling to more than 20,000 AA and NHPI entrepreneurs, and a program funded by the Department of Commerce's Minority Business Development Agency helped more than 500 AA and NHPI business owners apply for federal resources, which helped hundreds of AA and NHPI entrepreneurs create jobs, secure loans, and pivot their business models during the pandemic. So thank you for that, Miguel, if you're listening. More broadly, to the administration has worked hard to advance safety for AA and NHPIs by combating hate, xenophobia, and intolerance, notably by signing the COVID-19 Hate Crimes Act into law last year, and providing immediate relief to AA and NHPI individuals and families through the American Rescue Plan, reducing barriers and increasing access to federal services to our community, advancing equity for AA and NHPI communities through the White House Initiative and White House leadership, just to name a few. So over the next few weeks, we're going to use this equity series roundtables to deep dive on how the administration has made progress and continues to advance and empower AA and NHPIs on major issues, beginning with today's economic equity event. Mahalo for the opportunity to join you today. And now it's my honor to lead us into a message from Treasury Secretary Janet Yellen.
Good afternoon, everyone. It's great to be here today. On behalf of all of Treasury, I join you in celebrating Asian American, Native Hawaiian, and Pacific Islander Heritage Month. The experience of Asian Americans, Native Hawaiians, and Pacific Islanders is an embodiment of the best of the American experience. There's no singular story, but instead, a rich diversity of people and cultures that have contributed to our nation in profound ways. When I think of this year's AA&NHPI Heritage Month, the theme of building legacy together, our communities, journey of strength and resilience, I think of generations of Asian Americans, Native Hawaiians, and Pacific Islanders who have paved the way for increased opportunity for all Americans. And I think of AA&NHPI community leaders, faith leaders, and business owners who work every day to protect that legacy and promote opportunities, despite the disturbing rise of hate-based violence and discrimination that persists today. Strength and resilience are things that AA and NHPI communities in this country have experienced in profound ways. We know they have been disproportionately impacted by COVID-19, particularly as these communities have been on the front lines of the pandemic, with a number of Asian Americans employed in the healthcare, food, and restaurant and medical industries exceeding their overall share of the U.S. population. This administration designed our economic recovery with AA and NHPI communities and other disproportionately impacted groups in mind. That's why President Biden's American Rescue Plan established programs to keep families housed, expanded support to frontline workers and other Americans, and increased nutritional assistance. The issues that this session is focused on, navigating traditional and non-traditional sources of capital access and financing, is also critical for our economic recovery, especially for the 578,000 businesses owned by members of the AA and NHPI community. We've worked to address this challenge through initiatives like the Emergency Capital Investment Program that provides $8.75 billion in capital directly to depository institutions, including meaningful allocations to AA and NHPI serving depository institutions. And we're working to expand capital access to tens of thousands of small businesses through the State Small Business Credit Initiative, with the focus on small businesses in underserved communities. I'm proud to recognize the contributions of AA and NHPI leaders, communities, and families past and present. And I look forward to hearing from each of you about how we can be your partner in the months and years ahead. Thank you.
Thank you so much, Secretary Yellen, for that inspiring message and your commitment to advancing equity for our communities. It is now my honor to introduce our next speaker, a tremendous leader in the administration's work to promote economic equity, and that is our Acting National Director of the Minority Business Development Agency, Miguel Estienne.
Thank you, Crystal, and hello, everyone. Thank you for participating in our 2022 Asian American and Native Hawaiian Pacific Islander Heritage Month Business Series, which we are now excited to share is also part of the White House Initiative's Equity Series. My name is Miguel Estienne, as Crystal mentioned. I'm the Acting National Director of the Minority Business Development Agency, also known as the MBDA. I also want to thank Erica Muritsugu, Howard All, and Crystal K, and clearly Secretary Yellen for sharing this virtual stage with me today during these opening remarks. I would also like to extend my warm thank to the panelists today from the Department of Treasury, the Economic Development Administration, and my own team, including our Los Angeles MBDA Business Center, and our Senior Political Advisor for Capital Access, Carrie Lee, who will be your moderator today. We are here because supporting AA and NHPI owned businesses is an MBDA and a White House priority. We understand how hard it is for you to work in your business. It is our mission to provide the tools and services to supplement your hard work and help you tackle the challenges facing AAPI owned businesses. Bottom line, we want to help you succeed. That is what this summit is all about. During today's virtual event, our panelists will discuss traditional and non-traditional sources of financing. The MBDA and other federal entities have countless resources for businesses to access capital, grants, and other business development needs, including from our own MBDA national network. However, we understand it is not always easy to navigate the bureaucracy. Today, we will help you, give you guidance needed in order to be effective in that endeavor. Looking ahead, next Wednesday, May 11th, Our final business series panel will be a conversation with AAPI partners and stakeholders to break down the numbers and research behind the state of the AAPI-owned businesses. To sign up for this May 11th event, head to our website, nbda.gov, and search for AA and NHPI Business Series. Thank you again for joining us today, and thank you for your hard work representing this business community. Now I would like to turn it over back to Howard. Howard?
Director Estienne, thank you again for your leadership, your wise words, and a really excited to partner on this event. So up next, we have MBDA Senior Advisor, Carrie Lee, who is going to moderate the remainder of the event. This wonderful fireside chat. Carrie, the floor is yours.
Thank you so much, Howard, and thank you everyone for joining us today. I just want to take a moment to recognize how important events like this are. As an Asian American, an immigrant, and former investor, events like this are near and dear to my heart. And in my 20 years of investing in the minority business space, what I learned was that minorities, especially the Asian American community, were bringing outsized returns to their investors and their communities. As we recover from the pandemic, minorities are leading innovation and job creation, but sadly, access to capital is not keeping pace, forcing these communities to do more with less. That is why I'm so excited to start this conversation with our incredible panel today to tackle this and see what we can do to ensure communities have access to capital. On our panel today, we have Xingxing Wang, who is an assistant professor of finance at UCLA Anderson Business School with a particular emphasis on financial engineering. She's also at Treasury as a senior policy advisor at the Office of Capital Access and acting director of the Office of Consumer Policy. We also have with us today Eric Smith from the Department of Commerce of the
I think you're muted.
My apologies. We also have Eric Smith, who's the Director of Office of Innovation and Entrepreneurship. Eric blends technology, legal, and policy expertise with collaborative design to build innovation ecosystems in which entrepreneurs can thrive and companies to grow. He also oversees a portfolio of $325 million in grants and the National Advisory Council on Innovation and Entrepreneurship. So we're very excited to have him share with us the work of EDA today. We also have, as Miguel Estienne announced, we also have Bo Shivan Nansako from MBDA, the Minority Business Development Agency in Los Angeles that is operated by the Pacific Asian Consortium of Employment. Bo has an in-depth background in financial services and community economic development. Prior to joining PACE, she worked at the Thai Community Development Center as its Community Economic Development Director. So can't wait to dive in with our guests today. Why don't we start off with Xingxing Wang? Xingxing, can you just share with us from your perspective, what you're seeing in terms of the access to capital landscape and where you think it might be heading and seeing trends?
Thanks, Carrie. Just want to say quickly that I'm really excited to be here. I'm just really proud of MBDA and as well as other organizations for hosting an event like this, especially during Asian American, Native Hawaiian, Pacific Islander Month. So in terms of trends that we're seeing in entrepreneurial finance, I think the biggest trend is around new technologies that really bridge the funding gap between investors and entrepreneurs. New technologies have made communication easier, as we've seen during the pandemic, and they've also led to a decrease in transaction costs. So we've really seen the growth of online platforms such as crowdfunding, online angel syndicates, and online lending that operate beyond the more traditional sources of financing like bank lending and venture capital. Some quick examples that come to mind are companies like PayPal that is using technology and predictive algorithms to evaluate business risk and underwrite small business loans. There's arguments on whether this is really good or bad, since we know that there's biases in financial data, but has arguably expanded the geographic opportunities that are available to small businesses. Speaking of geography, we also seen an increase in sources of capital outside of the traditional startup hubs. So we've seen a lot more focus on building ecosystems in parts of the countries that previously might have been overlooked. I think other trends we see in terms of size, particularly because of the lower cost of starting a company, there's been an explosion at the smallest ends of the market, which is really the small businesses that we're talking about today. So this has led to a lot more experimentation, both in terms of capital models, but also in terms of the type of companies, innovations that are being funded. Alongside that, in the seed and early stage space, we've really seen a rise in investment programs that are tied to incubators and accelerators. So this provides access to not only finance and capital for founders, but also information and support, especially to first-time entrepreneurs that might lack experience or might lack the network to finance, to venture capital. Lastly, and I don't know if we'll speak about this more in terms of frictions, but there's been a concerted effort to address frictions and biases in terms of gender and race with the creation of new funds that are targeting underrepresented groups. And I'll mention this is not necessarily in an altruistic manner, but rather because I think investors and people in general are realizing that they're leaving money on the table by not financing these populations, right? I think, Carrie, you mentioned in your work as an investor that the Asian American community really delivered outsized returns for investors. And I think that's starting to become more recognized by the general investing community. And coming from the Treasury, I'll just make one small pitch, which is that the government and governmental programs, like Secretary Yellen expressed earlier, are committed to bridging this capital gap as well, particularly in underserved communities. So I worked on the state small business credit initiative that Janet Yellen talked about. In particular, it's a $10 billion program that allocates funding to state governments to support their venture capital and lending programs. And I think what's really special about these type of programs is that they work directly with fund formation projects at the state level, such as CDFIs. And a huge requirement of these programs is that the SSBCI, the publicly funded capital, must be matched 1-to-1 with private capital. So this is really about crowding in private sources of capital and providing access to capital, again, for these underserved communities. And the goal of the program is to really create structural change through building capital infrastructure at the local level, especially in places like Nebraska, Wisconsin, which typically do not see the large amount of investment that coastal urban regions do. So I can keep going, but I'm gonna throw it back to you, Carrie, before I keep rambling. So hopefully that sets the stage for a lot of the trends that we do see in this space.
In the interest of full disclosure, I've been working with Shinshin on the SSBCI initiative, which I'm also very excited about. And just a plug for the Minority Business Development Agency, keep your eye out for potential opportunities of fundings later this year. Shinshin, you mentioned two things that I thought was particularly interesting. One is information flow. What sort of information flow, or how can information and transparency remove that biases from investments? And what sort of knowledge, data, and research do you think would be the most impactful in this space?
That's a really great question. That's actually a really hard question, right? Because I think on one hand, while data does improve transparency and provide information, I mentioned earlier, data is not free from bias, right? One example that comes to mind very quickly is facial recognition software that doesn't detect dark skin as well as light skin. There's a lot more examples of failed machine learning systems that kind of amplify potentially sexist hiring practices or discrimination in investing or even racist criminal justice procedures, right? On the investing front, think about algorithms that use historical success as a predictor of future success for lending. But if historical success is very much concentrated in certain demographics like white males located in coastal regions, that's not going to be exactly helpful in identifying the next generation of entrepreneurs to lend or to invest in. But I do think the part that I'm most hopeful about in terms of information removing bias is the accountability that comes through transparency, right? As funds and as banks are held accountable to the decisions that they make to their investment portfolios and how equitable they are, I think that's when we're going to start to see a lot more focus on equity and inclusion. And that's what we're seeing now. Once there's been public attention drawn to the fact that these venture portfolios, just as an example, are very much lacking in minority entrepreneurs, very much lacking in female entrepreneurs, right? That's what really led to a push in Silicon Valley to invest more in these underrepresented groups. So having the right benchmarks really matter. In terms of your second question about the knowledge and data that is necessary, I think there's a lot we don't know from existing data and from existing research that we still need. So while we know that there are frictions, whether geographic, demographic, or institutional, that exist in the marketplace, we don't know their exact impact. What I mean by that is, we don't know how important access to capital is across different demographics. We don't know how it compares to access to expertise and to training, right? So how important is technical assistance, for example, versus just direct financing? We also don't know the differential effects across industries. So the importance of capital may be very different in software compared to industry like pharmaceuticals, which has a much longer time horizon to profitability and exit, and also has much larger requirements in terms of fixed assets. I think the other thing I'll mention is we also have very, very limited data on outcomes. And that comes with the territory of looking at private small businesses. So it makes it really difficult to study these questions quantitatively. For example, we know that if a small business goes public, that's a success. If they get acquired for a large sum of money, that's a success. But otherwise, we don't have access to revenue data or employment data. Maybe the IRS does, but for the rest of us, right, we're not able to see those things. And so not being able to evaluate outcomes makes it really difficult to do good research, to think about what do we need for development of capital markets.
On that note, I'm sure on this call we have a lot of entrepreneurs or aspiring entrepreneurs or business leaders. Are there things that this community can do, or entrepreneurs in general, how can their voices be better integrated into capital market policy? I mean, that's a very difficult question to tackle, but are there ways that they can register their voices?
Yeah. I mean, I think the easiest thing to say is to get involved. But I think the better question is actually how policymakers can involve entrepreneurs and design programs with entrepreneurs in mind, right? That's just to say that I think the burden should really be on us within the government, and maybe in private sector and positions of power to really engage entrepreneurs. And the burden shouldn't be on entrepreneurs to seek out information or to seek out ways to affect change.
That is a really good reframe.
So for the SSBCI program, we focused not only on academic and public-private research on program design, but we spoke to a lot of field offices, CDFI funds, and other market participants on what type of programs are most effective. And so the government does provide opportunities to seek public opinion in design of these programs. We also wrote in a lot of flexibility on the guidance such that we aren't creating deterrences for entrepreneurs to access this financing, but rather to allow for different jurisdictions and different private partners discretion in how to allocate the capital. And so I think for policymakers and for public servants, we can do a better job in involving the community and seeking feedback and in providing that flexibility that the business community really needs in order to be successful.
I would just probably also add that I think that same burden of listening to entrepreneurs and startups should also be asked of major allocators and institutional investors as well. Definitely.
I mean, the public sector can do a lot, but the private sector also needs to pull their weight.
Eric, speaking of innovation and creating healthy ecosystems where entrepreneurs can thrive, can you please tell us a little bit about the work that you're doing over at EDA?
Yeah, happy to. Thanks. And I'll echo Shijin and say I'm very, very happy and grateful to be here and talking to you all about this topic. So at EDA, broadly, our mission is to increase and support innovation and competitiveness of regional economies throughout the United States, ultimately looking for growth and success in this worldwide economy, supporting community-led development and helping build the agility and resilience of those communities. And at EDA, we do that through a whole variety of mechanisms, from basic infrastructure, where an industrial park needs greater water supply or better transportation access, all the way through to programmatic support of entrepreneurship and the organizations that support entrepreneurs. That's where I live, more in the entrepreneur support part of the organization, and the Office of Innovation and Entrepreneurship focuses on building these ecosystems in which entrepreneurs can thrive. And access to capital is obviously very important for entrepreneurs and technology entrepreneurs, which is our real core focus, where they can thrive. And I think to the point of innovation in the capital side, in the capital side of that equation, it's not just about access to any capital. It's about access to the right capital for that company that is operating in that industry and that is at a certain stage of development. And that's the hard question, right? There's capital out there, but making sure that it's tailored in a way for so that the company can in fact grow and access the type of capital that they need. And I also think I feel like I'm going to echo a lot of what you said earlier, Shin, but the support services are also really key. And so that's part of our theory of the case in how we make our grant investments to support these sources of capital and to support the organizations that are helping the entrepreneurs out just beyond cash. Is what other types of support do entrepreneurs need? Whether we focus on technology entrepreneurs, but even within that domain, a software entrepreneur and an energy generation entrepreneur or an energy storage entrepreneur or remote sensor entrepreneur, all of those folks really do have separate contexts in which their companies operate. And it's not just the types of capital, but the types of support, the networks, the specialized equipment you might need in order to demonstrate something in a cost-effective way. All of those things really, really matter for those entrepreneurs. And so to that point, like a lot of our efforts really are in some ways where we are reactive to the needs of the communities. And so when we're out there saying like, hey, come to us, we're actually doing this right now. So if you know an entrepreneur support organization that's looking for funding for a new or expanded program, have to check us out, but shameless plug. But I would say, we really ask for what is the context in the region that you're serving and in that technology cluster? What are the particular gaps that you're facing? And how are these like combination of services and support, how is that all together going to work to support these entrepreneurs in these communities? And I think one last thing I'll say, we are really focused on regional economies all across the US. And I think we're looking a lot at, communities where there's not access to this type of service. And sometimes that's geographic, right? Rural communities, sparse populations, it's hard for these networks to come together. But that's not the only type of community, right? Like some of these, some services are just not available because folks are disconnected from these networks for whatever reason. And I think as much as we do have, better communication technologies and more platforms out there, there are always more people to bring into this network so that they do have access to the capital and services they need to start these companies and to grow. So I also will stop rambling and maybe toss it back to Carrie to help shape the conversation a little more.
No, this is particularly interesting because I think what we're hearing a lot in the dialogue now is place-based incubators or place-based development. Eric, could you help us understand a little bit of what that means? How is a place-based incubator different than your average incubator? And what role, like how do they drive those access to networks and access to capital to these communities that are not in San Francisco, Los Angeles, Miami, New York?
For sure. Happy to. I think, from my perspective, a lot of this really is like being grounded, not just physically, but also kind of purposefully in that place, wherever you happen to be, and with the purpose of serving the people who are there. There are certainly, incubators, accelerators, successful funds that aren't located in Austin, Boston, New York, and San Francisco, but that doesn't mean that those aren't their primary focuses, right? So really understanding the context in which the incubator is operating. It's not a like parachute in and save the day type of paradigm, right? Like you need to really understand like this is the business culture here. These are the networks that exist. These are the pools of capital that exist. And these are the things that are missing that we might be able to either connect from another area or build here to create that additional support. And I think that like just deep understanding, not just of the geography, but of the population and the way that folks work together is really important there. And that's one of those things that it's sometimes hard to see in a grant proposal, right? Like 10 pages of describing how your proposed solution is going to increase technology entrepreneurship. But I think it does come out, like it shows where there's that understanding and intentionality of the community as a whole.
Yeah, in addition, as we talk about like filling those gaps, whether it's geographic or demographic, what can large philanthropies or what can the government do to sort of incentivize the capital markets to focus on those market gaps, if you will?
Yeah, I think the one thing that a couple ideas. I think one is something that we've been experimenting with, and obviously these things take time. The returns to the economy as a whole are long term, but for funds in particular, one of the things that is challenging for funds or for an angel network is how do you get that initial operational support? How do you actually pay somebody to do that work? Because I think that part is important, right? Like in some places where there's a lot of infrastructure, where there's a lot of wealth, like you can expect somebody to just step up and volunteer to do that because they see it as important and they have the ability and wherewithal to do that. But that's not true everywhere and not true in every community. So I think, frankly, just like paying for that particular activity like has a lot of value and can unlock some of that activity. Especially if you're thinking about a fund, if you haven't had any LPs invest yet, you don't have any management fee, right? But you need something to catalyze that. The other thing that I think that we can think about and that we can incentivize is experimenting with different models of deploying capital. I think there's debt and equity, people are familiar with this, but whether it's revenue-based models or blended models, various kind of structures of deals that maybe are incentivize risk but manage that risk in a way that gets folks comfortable. I think that the public sector or the philanthropic sector, that's a place where we can help defray some of the costs of experimenting with those types of models to see what really might work.
Well, that is very exciting, pioneering stuff. So I'm excited to see what that next generation of solution is. I'd love to just also turn over to Bo and focus a little bit more about some practical advice or assistance for someone who's starting out, who either has a startup or is looking to grow their business. Bo, could you tell us a little bit about what services are available to entrepreneurs and business owners?
Sure, thank you, Carrie. Hi everyone, my name is Bo Sivanansagun and I'm the director at the Pacific Asian Consortium in Employment. PACE was awarded to operate the Minority Business Development Agency Business Center in 2021. So we are quite new to the MBDA family, but very happy to be here. Prior to work under the MBDA as a business Development Center here. PACE has been providing technical assistance, mainly like a one-on-one counseling, webinar, and also access to capital under the SBA Women Business Center and also the City of Los Angeles Business Source Center as well. The type of businesses that we serve, they can go from startup to operating businesses. And I would categorize them, as a startup, likely no revenue at all, right? But then let's say if a business with, 500,000 or more in revenue and businesses with less than 500,000 in revenue, there would be different. And I think since we are here today to talk about minority business owners, I would like to throw in, our traditional small business owners as well, like, restaurant owner, spa, massage, retailer, and also like service provider and, the independent contractors that we serve too. So we have seen like a variety of business owner that come through our door like day to day.
Thank you so much. And what sort of technical assistance do you see them need most?
It really depends on, the state of the business where they are, right? So if they are in the startup stage, definitely like access to capital. And I would say access to capital has been a very popular topic, especially during the COVID-19 pandemic. It seemed almost like every state of business need additional capital, either like through loan or through grant program. But then, if let's say if it's a startup, they might need like advice on the business planning strategy, right? Or like, financial projection. And then what is the optimum structure, like, between debt and equity. But for the operating business, since they have already been in business for at least a couple of years, that's how we define operating businesses. So then as a result, their need might be different because they might want us to help more on, let's say, marketing, recruitment, how to seek like a new supplier. So it's more focused on the business operation and expansion or extension during the COVID-19.
This question is ironic that I'm asking you because I have someone from Treasury and someone from Commerce, but you have the most touch points with the constituents. What sort of governmental resources are available to clients when they walk into one of the business centers?
Yeah, so we can provide one-on-one technical assistance, right, through the MBDA Business Center. So we not only provide, let's say, consultation, but we also connect the small business owner to resources as well. For example, if they are seeking additional capital, we can connect them to our lending partners, right? But if they're looking for equity, we think that equity would be better for them. So then we try to connect them to, equity like venture capital or other sort of capital that we, have been working with. Besides, on top of that, PACE also operates the CDFI, the Community Development Financial Institution. So we also receive funding from the Economic Development Administration or EDA here. So we also provide access to capital, within ourselves too. And let's say, for example, if they want to look for the SBA product, or maybe, let's say they are not in Los Angeles, right? And then they want to seek access to capital, we can also refer them to other SBA like lenders, or maybe like the SBA district office in their area. So then it's like we have these available resources that provide by federal resources here, and then we are happy to connect our clients or small business owner to these available resources.
Thank you. That is really helpful, Bo. I just wanted to open this question up to everyone on the panel, but in your individual seats, both anecdotally or quantitatively, we know that not all minorities are monolithic and each community struggles with a different type of challenge. Have you seen challenges that are specific to the Asian American community in this business environment?
So for the Asian American community, I would have said that because the nature of businesses that they are in, they are more or less in a higher risk industry, right? So like I mentioned earlier, like restaurant, retailer, or like services, independent contractor, traditionally like a financial, like lender, they wouldn't extend their arm to this, industry. So that would be that typical challenges. And the other would be the available information or resources in languages. So because this business owner, they likely work day to day, like in and out, like just try to make that business become successful, right? So they might heard, let's say, about the SBA loan product, but then, they might not have access to these resources in languages. That's why we partner with the SBA in our district office. Let's say that if they have, client who seek help, in languages, we can provide technical assistance to them. The other, I would say, would be the technology challenge for this business owner. So maybe because of the COVID-19 that now we operate virtually, and then most of the grant application or loan application, the business owner have to apply online, right? And then most of the time, they might not be able to create an account or upload the document online. On top of that, they may not have the document ready, like a tax return or like a financial document. So, all of this prevent the AA and NHPI, to access to available resources.
That is very helpful. Thank you so much, Bo. I really appreciate it. Before we pivot over to non-traditional access to capital, I just wanted to plug for this community. Please check out the MBDA website. We have a broad agency announcement. We're looking for projects who, we're looking to give grants to projects, researchers, or institutions looking for solutions for alternative finance. So thank you so much, Xin, Eric, and Bo. And if you guys could just stick around a little, we have a Q&A session at the end of this. In the meanwhile, I am particularly excited to introduce you to Jean-Robert Bagari, who is a senior advisor for capital access and global markets at the Minority Business Development Agency. Jean-Robert, or who I will affectionately call JR, is Haitian American and has over 30 years of experience in commercial banking, international trade finance, and venture capital. He is our certified blockchain specialist. He has a degree in finance from Harvard University, an MBA in international finance from George Washington. JR will know more about this topic than I will ever forget, and given his long, extensive experience with international and domestic policy and XM banking and finance. JR, thank you so much for joining us today.
Thanks, Carrie.
I'm going to hand it over to you.
Okay, it's a pleasure to be here. Good afternoon, everyone, distinguished panelists, and just wanted to talk about some different things on non-traditional finance and alternative forms of financing, and the importance in terms of helping small business, medium-sized businesses. So I think most companies are just traditionally geared towards going towards bank financing, and it's very important for companies to know all these different other types of financing structures. Alternative finance can help augment the financial health of companies, help them grow in size and scales. Just from my experience in commercial banking, we know the commercial banks are very conservative and restrictive and can limit the growth. Usually they put blanket liens on assets, machinery and equipment, and require personal guarantee. A lot of small companies don't meet the collateral coverage, and then they're not able to satisfy the underwriting criteria. Basically, it's a financial analysis with balance sheet, income statement, profitability trends, amount of debt or leverage, financial ratios, and then the most important one is cash flow. Cash flow is what repays the loan, not collateral. So we know that the traditional legacy system has not been kind to minorities. It's been documented that they often experience more loan denials, higher rates of interest, and lower approval. So oftentimes the needs for financing basically originates from timing differences. So instead of it might just be a bridge loan rather than a long-term obligation. So companies really need to be knowledgeable about other sources of financing in terms of perhaps maybe a credit union or a CDFI, specialty lenders, VCs, angel investors, crowdfunding. We talked about SSBCI. We know that in terms of access to capital, it's the #1 impediment for the growth of a small business. A lot of the narrative has been focused on biases, but the other part of the narrative that we don't talk about is financial literacy and financial education. You don't know what you don't know. And so this is why companies need to educate themselves on different forms of financing. And as Eric said, matching the right type of financing for your company. So here at MBDA, much of what we do, there's the main buckets are access to capital, contracts, and international. So since we don't have loan programs, we really need to be knowledgeable in directing companies to the right type of financing, i.e. so it could be like purchase order financing, it could be financing under an IDIQ, indefinite demand, indefinite quantity, which is a long-term contract, task order financing, accelerated payments, including speed pay, mobilization financing, where you may need some financing to get your contract up and running. And then of course there's mezzanine financing, which is long-term financing, which is subordinate to a first lien position of a bank. We work closely with the SBIC program, and one of our business centers was recently awarded a SBIC license. It's called Innovate Capital to provide such type of specialty financing. And then of course there's the US government guaranteed loan programs, SBA, Exim Bank, USDA, Department of Energy, and Department of Transportation. All of those guaranteed loan programs work in tandem with a commercial bank, which guarantees the bank funding. In terms of technology, we know technology has made it easier to access funding, but again, companies need to be wary of these, predatory type lenders, and so it's essential to read the fine print and know the interest rates and the terms and conditions. And all of these things tie into what we call a capital stack, basically different sources of financing which can optimize your business for growth. So ideally, a company would have a short-term line of credit, a medium-term or a short-term line of credit or working capital, maybe a traditional bank loan, and a long-term debt instrument if necessary. So the worst thing that we know a company can do is to use short-term debt for long-term purposes. That's a recipe for disaster. So now we know that with COVID-19, the pandemic accelerated a shift towards the use of cashless electronic transactions for purchases in e-commerce. And the pandemic also accentuated the rise of digital assets and various cryptocurrencies. So cryptocurrencies now and digital assets, they've hit mainstream. We have an executive order that's put out by the White House now to examine that. And we know that right now, cryptocurrencies are basically built on the blockchain database technology. They've exploded in popularity, and almost 20% of adults have either invested, traded, or used cryptocurrency, and the percentage is growing higher every day. The blockchain basically creates the underlying transparency of a decentralized but publicly viewed ledger, and that technology can be used to record other types of information. It's not just for finance, anything that involves record keeping. So the records are kept on many computers that together form a global network so that no institution can control them. And so cryptocurrencies can digitize value chains, improve access to digital financial services, and the efficiency of digital payments while offering lower transaction costs. Now, there's other use cases, one being financial inclusion in terms of banking the unbanked. And we know that financial inclusion it's one of the many benefits in terms of helping bring unbanked folks or folks that don't use banking or traditional bank services into the fold. So the combination of digital currencies plus mobile technology can basically penetrate this financial system in the underserved populations by satisfying the needs of smaller consumer transactions at affordable cost, reducing transaction time, and then facilitating the processing of bulk transactions such as economic stimulus packages, stimulus payments or PPP loans or social services, et cetera. And another thing is that in terms of remittances and international trade, cryptocurrencies, they make it easier in sending remittances because it eliminates the use of an intermediary. In the diaspora communities here in the States, many people send money back home to their family and friends. And the main source of that is through the use of money transfer services such as Western Union or MoneyGram. The fees to send money abroad can be very expensive and can vary upon the speed of the time of the transfer. Now with cryptocurrency, you can send that money through your phone, through Twitter, through different applications at a fraction of the cost. So, in terms of the speed, it's transformed everything for international trade and import-export transactions. It's made it again a lot faster. You don't have to use an intermediary. Generally, the payment stream goes from a U.S. bank to an intermediary bank to the foreign bank. Now it can just go direct to the foreign bank. So that's with the use of smart contracts and payment systems. So also in terms of a hedge against inflation during the pandemic, many people invested in crypto as a hedge against inflation, basically to prevent the devaluing of their currency and loss of purchasing powers. We as government workers were not immune to the effect of inflations, as although we were happy to receive our cost of living increase, it was far below the official rate of inflation. So our purchasing power was weakened as well. In terms of the financial system, decentralized finance, it's a whole new paradigm. And basically it's an emerging financial technology, which is based on distributed ledgers, similar to those used in cryptocurrency. And the system basically removes the control banks and institutions have on money, financial products, and financial services. So in terms of DeFi platforms, we have BlockFi, we have Celsius, we have Nexo, Gemini, and then you've heard of Coinbase. That's the service where you can buy the cryptocurrencies. And in terms of capital access or access to capital, you can borrow against crypto without all the rigmaroles going through a traditional loan application. You just borrow against it. You get your funding the same day. There's no credit underwriting. And look for the emergence of what's called crypto angels, people that will make loans to businesses based on borrowing against their own cryptocurrencies. And so in terms of payment systems, banks have really pushed back against cryptocurrency just because it's a direct competitor to them. But a lot of them have embraced that technology in terms of the facilitation of payments and everything. And so we know that JP Morgan Chase, Barclays, UBS, Bank of New York Mellon, Morgan Stanley, Goldman Sachs, and other financial houses are using this cryptocurrency in terms of for their own internal use and for wealth management services as well. In terms of country adoption, look for more and more countries to adopt cryptocurrency, to use cryptocurrency. We know that El Salvador and also the Central African Republic have adopted crypto as Bitcoin actually as their legal tender. And we expect to see more of that probably in Africa, Latin America, and the Caribbean in the coming future as these countries look to kind of stabilize the swings in inflation and the devaluing of their currency. So I know I said a mouthful, so I'm going to pause there and open up for questions. Gary?
Sorry, you think after 2 years I would have figured out the mute button? I'm really glad that you talked about foreign countries sort of adopting cryptocurrency. This community, as many immigrant and minority communities, have a lot of international ties. The institutionalizing of cryptocurrency is of particular concern. Do you have any advice for this community as as they think about like the international transfers?
Sure. One of the main points with international transfers, while companies or countries are adopting this, is basically to, as I said, stabilize their economies and prevent the weakening of their currency. A lot of the currencies are pegged to the dollar, and so when the dollar goes down, their currencies go down. And in terms of international trade, it takes more of their foreign currency to buy dollars. And in terms of international trade, it makes it more expensive for them to buy American goods. So now with crypto, either Bitcoin or something else, or even a stable coin, which I did mention, stable coins are basically pegged 1-to-1 to the US dollar. So again, it pretty much stabilizes that fluctuation in terms of currency devaluation and interest rates. So I think it's a win-win, and it's going to transform. Actually, it already is transforming the whole international trade arena.
Now, JR, for those of us who are crypto challenged, could you just spend a little bit of time? I've heard these names, but could you walk through the differences between Bitcoin, Ethereum, stablecoin? Like, could you walk us through the differences through some of these bigger names in this space?
Sure. First of all, there's many cryptocurrencies out there. So really, again, you have to do the research. You kind of need to educate yourself on the cryptocurrency ecosystem and figure out the use case for each coin. So obviously, Bitcoin and Ethereum are the number 1 and number 2 coins, and they have a specific place in that ecosystem. Bitcoin was started out as a currency. It's kind of moved towards a store of value. It's often referred to as digital gold. There's a gravitation towards Bitcoin versus gold and silver. It's more portable. It's a hard asset. I mean, yes, it goes up and down. There's some volatility, but the volatility is kind of thinning out as more and more people invest in this. Ethereum is important because a lot of the financial platforms, the financial decentralized finance, and run off of Ethereum-based platforms. So that's the importance of Ethereum. And then we've heard about metaverse coming up. All that runs off the gaming token kind of space. And again, that's Ethereum. In terms of stablecoin, what I just mentioned, that's basically kind of akin to the US dollar. You can put your money in stable coins and you can still get a yield of 8, 9, 10% versus the minuscule rate of return that you can get from a bank. And this is why a lot of people shifted towards cryptocurrency during the pandemic as the Federal Reserve expanded the money, into the money supply, i.e. money printing or quantitative easing. And so we saw a loss of our purchasing power. And this is why people shifted towards that to preserve their wealth. And so, during the pandemic, it made it easier because the interest rates were pushed down. And so large savvy investors, institutional investors were able to take advantage of that period where they could borrow money basically cheaply, go out and invest that money, put it into other assets which appreciated in value. So, pretty much if you had real estate or if you had something like that, it went up in value, but those that didn't have that were kind of shut out. So the net effect of that was basically, the unintended effect of the money printing was that the rich became richer, the poor became poor, and unfortunately the middle class ended up paying more taxes.
Sadly. Do you have just generally, as many of our viewers today may be considering getting into cryptocurrency, do you have sort of, what would you say are what is your advice to them before they get started?
Like I said, try to educate yourself on the ecosystem, the crypto ecosystem. Don't chase returns. Some of these are, and you being an investor, some of these are basically real-time joint venture or real-time VC investments. And some of these coins, they go bad. You lose your value, and you don't want to be involved in what's called a rug pull or an exit scam, where the people just disappear. So that's why it's safe to, it's better to go towards the more known coins, the Bitcoin, the Ethereum, the XRPs, the Cardanos. I would stay in the top 4 or 5. You know, they are volatile. There is risk. It's not riskless, but I think if you do your homework and realize the importance and the relevance to the ecosystem, then you can get some comfort in that. And so they're making it really easy now to purchase cryptocurrencies. PayPal, Coinbase is the most popular one, but there's a lot of different platforms where you can purchase cryptocurrency actually even through your phone. So it's going mainstream.
I think it is mainstream by now.
For sure.
Thank you so much, JR. I wanted to take this opportunity to open up the floor for any questions that anyone may have for any of our panelists. And I think at this point, I'm going to hand it over to Howard to help us funnel some of those questions.
Thanks, Carrie. So yes, if you have a question, please use the raise hand function and we will unmute you and you'll ask your question. Don't be shy. There's a raise hands function. And we have a wealth of experts here, as you all know. So not checking any questions. Again, use raise hand function. Otherwise, we have one question submitted in advance. It is, where would be the best place to seek funding to start a business?
I think maybe Bo might be the best person to tackle that.
Hi again. If it's a startup business, I would go with the non-traditional, lender, like Robert mentioned earlier. So there are CDFI or community development financial institution that fund startup, and that can be in the form of loans and also equity as well. It's really depend on like your, the capital that you're looking for, right? So let's say certain CDFI, they may fund up to 750,000, and then some, they might even do more.
Okay, awesome. So if there's any more questions, use the raise hand function. Otherwise, Carrie, thank you for your awesome moderation of this wonderful panel. Thank you all panelists. And if anything, I will kick it off to Crystal to provide us closing remarks. Crystal, the floor is yours.
Thank you so much, Howard, and thank you to all of you for joining us and to our excellent panelists and all of our speakers. We're so grateful again for the work that you are doing to ensure that our businesses have access to a number of resources that are offered through the federal government as we promote equity and accessibility for all of our communities. So again, thank you so much. And we hope that some of you will be able to join us next week. We have another series as part of our broader equity series for the month. And so we have another event focused on economic equity next week. But thanks again for everybody who tuned in, and we hope to see you at some of our other events this month. Thank you.